Ladies and gentlemen, welcome to Woodburn Accountants and Advisors main webinar series, where we are looking at employing individuals in China. On day one, we were looking at the critical labor law questions that are asked in terms of how employment is structured, what you need to know about contracts, employee handbooks, termination, etc. Yesterday, we delved a little bit into I've even forgotten what we delved into. It's been one day after another of action. We were delving into employment structures and how you can actually employ people. And today we're looking at personal income tax and how that is going to be structured. So as I normally do when I start off these webinars is we always evaluate whether people are newbies, whether they're startups, or whether they're experienced China hands. I would love to know a little bit about your background. If you could be so kind in the chat box to just let me know, are you a newbie, are you a startup, or are you an experienced China hand? How the webinar works, we use Zoom meeting. If I run into any technical difficulties, it takes me about 1 minute to 2 minutes for me to reboot. If you run into technical difficulties, just try to log off and log back in. But just know we are also recording this session and it will be up on the YouTube channel later on in the week. If you have questions, there's no dumb question when it comes to China, please ask away. There will be a slide at the end of the presentation today where you can reach out to me and also ask questions on a one-to-one basis. Today's topic is relatively sensitive, so it could be that you don't want to specifically talk about your case and how it would impact you. But like I said, use this time wisely and ask any questions, or if you have comments, please do share them as well. A little bit about myself. My name is Christina Colucci. I'm the head of business advisory at Woodburn Accountants and Advisors. I'm one of the leading experts on inbound investment into China. I've been doing this for 17 years, been in the corporate services sector for 17 years, solely related to the Chinese market. At Woodburn Accountants and Advisors, we help, we advise, we create business models that are suitable for clients in both jurisdictions, Hong Kong and in China. And we've helped over 500 companies with their market entry, their strategy, their implementation, as well as their growth in the Asian region. I'm a creator of different methodologies because I do feel that in 2021, many of the important administrative aspects that you have to think about for the Chinese market are systematic processes, whether it's developing a China roadmap, registering your trademarks and saving your brand, incorporating a company, growing your business, and having that communication with your Chinese finance team or Chinese accountant, choosing the right people in your corporate management structure who are ultimately the decision makers for the China business, and also how to recruit and employ your first employees in China to make sure you do have stability during the startup phase of your organization. We have webinars and we are promoting these webinars throughout our YouTube channel and on our website. So if you're interested in downloading them, please go ahead and do that. I'm also an author of a newly launched book on Amazon called The 9 Superpowers to Succeed in China, which ultimately provides you with the right tips and tools to create and design your own action plan, your own journey for the Chinese market. My goal has been to help companies avoid the most common obstacles that exist in the Chinese market. And this book has those types of tools and tips in them. If you go to any Amazon, just type in 9 Superpowers to Succeed in China, and you can download the Kindle version or apply to get the hard copy. And I hope that the book will be useful. I am looking for reviews, so please do share. So today we're going to be looking at how to calculate your personal income tax in China. We're going to be covering two things: individual income tax and tax policies under the coronavirus, as well as new legislation that will be coming out in January 2022. So why should you be concerned by income tax issues in China? Well, let's face it, we're all looking to save taxes. We're all looking to optimize our personal income. We're looking to save. But what I want people to realize is that they need to know that on a global scale, you can't just evade taxes or make the assumption that you just don't pay taxes somewhere, all right? What we want to do in China is we want to optimize our tax situation. Taxes have to be paid, and they've got to be paid somewhere. We're not always going to find the best tax regime in a jurisdiction, but there are always ways where we can optimize your tax structure versus evade the taxes. All right. So on January 1st, 2019, the individual income tax law was revamped and implemented. So it is still a relatively new system. It's just been, it was 2019, 2020, and we're now in the middle of 2021. It's just 2.5 years of this new individual income tax system. And why it's important to look at what those changes were is because when people do research about personal income tax in China, they still see articles or calculations or news that was published prior to Jan 1, 2019, and they still think that's valid today, but it's not. So I want it to be clear and transparent that when you're looking for information, make sure you are looking at the individual income tax law that was implemented as of Jan 1, 2019. We will also be touching on today a little bit about the assistance that was occurring during the coronavirus, but ultimately we'll be looking at what's popping up in Jan 1, 2022, because further changes will be occurring as well that are not so optimistic. Now, when this new tax law, individual income tax law, came out in Jan 1, 2019, everybody was a little bit nervous. They did not know whether they were going to be greatly impacted by the new law. They were not sure about whether they were going to be paying more taxes. There was little transparency with HR departments in terms of how contracts should be amended or how salary packages should be amended. So the whole purpose ultimately of this individual income tax law was to expand the deductibles, adjust the tax brackets, and change and update the residency rules. So these are going to be 3 things that we will look on today. Ultimately, the government had the mindset to try and decrease the tax burdens for lower income earners because the cost of living in China is increasing. If you look at all of the tier 1 cities and many of the tier 2 cities, inflation in those cities is in many instances double digit. So to lower the tax burden and also to not widen the gap, but shorten the gap between big income earners and low income earners, because there is quite a large disparity between the 2 groups. They are trying to lower the tax burdens for the lower income people. So it could very well be that if you're a high income earner, you're going to be paying more taxes. If you're a low income earner, you are going to be paying much less taxes. So let's look a little bit at the tax threshold. So the tax threshold will be increased from 3,500 renminbi to 5,000 renminbi effectively. What does this mean? It means that when you look at your gross salary, your monthly gross salary, you have an automatic deduction that is provided to you, regardless of your nationality, whether you're mainland Chinese or a foreigner, of now 5,000 renminbi. Prior to Jan 1, 2019, it was 3,500 for mainland Chinese individuals, and it was 4,800 for foreigners. And they've leveled this playing field that it is now 5,000 renminbi. In addition to that, tax is now calculated based on an annual salary versus on a monthly salary, okay? And why they've done this is because some people are earning income outside of just their employment. They might be earning income through royalties, through commissions, through dividends, through author's remuneration. And many times this income was lost when they were doing their monthly declarations. So now when you are doing your taxable income, it is calculated on an annual basis. All income needs to be included in that, whether you are a foreigner or a mainland Chinese. So when you are looking at the tax brackets on an annual income, this is the breakdown for you. This is the table that you should be following in order for you to understand how to calculate your taxes, okay? In the middle, you've got the comparison from 2018 to current rates. You've got the tax rate, and then you've got an additional deduction. I will be showing you a slide on how to make that calculation, but the table is here for you to be able to see where you might fall. If you're watching on this on YouTube, you might just want to press pause, take a photo of it so you can see it. Now, you might be wondering why I put in two tables. I put in two tables because although you are calculating your taxes on an annual income, the tax bureaus actually withhold your monthly tax to make sure that you actually pay it at the end of the day. So although they are following the annual tax bracket and you're actually following this table, the annual income table, I prefer to look at it from a monthly perspective because your taxes will be withheld on a monthly basis. And it just makes it a lot easier to see what the amount is going to be withheld each month. So these are the table that you would look at to calculate your monthly taxable income. So in terms of the tax brackets, right, the big question is always, who does it affect ultimately? That's what everybody is going to be asking, whether you're a mainland Chinese person or whether you're a foreigner. So the adjustment of the tax brackets will mainly lead to a tax relief of individuals with low and medium income, since the range of the 3%, 10%, and 20% tax brackets have been expanded, while the 25% has been narrowed, as you can see from the table here. So the tax brackets for an applicable tax rate of 30, 35, and 45% remains the same as before. The adjusted tax brackets also reflect the change from monthly to annual calculation, even though I've put here on the table the monthly income, because for me, I find it much easier to use that as a guideline. So it is really impacting the lower income individuals, especially if you're looking at grade 1, 2, 3. Grade 4, no change whatsoever. And grade 5, 6, and 7, slight increase. So the big question always is, what can I get exempted? Or what can I use as a deduction to calculate my income tax rate? So these are special deduction items. Now, one thing I want to be clear here is that this is only applicable to foreigners. Mainland Chinese people can have allowances, but those allowances are still taxed because it's taxed based on their total compensation. Foreigners have the privilege of being able to use these special deduction items to downsize their tax liabilities. So that can be support for the elderly. Many foreigners don't have that in China. Expenses for further self-education, like for example, language training, the education expense for children, healthcare costs, housing loan interest if you decide to purchase a property, housing rent, and any individual who donates an amount to charitable causes can also be used, but there's a limit not exceeding 30% of the income. Okay, so these are the special deduction items. Now, when you are negotiating a salary package with an employee, right, the big question is, how do I calculate everything and how does it look like? So I wanted to create this for you in 2021. How would it look like? So let's say a foreigner is earning a gross salary of 50,000 RMB. And let's say they have no children, but they have rent, which is amounting to 20,000 RMB, and they can use that as a special deduction. That is the only deduction that they have available to them. So you would do 50,000 RMB minus 20,000 minus 5,000. Remember, there's that initial deduction that is available for all employees in China of 5,000 RMB. So that comes to an amount of 25,000 RMB. You then go to the table. So let's go to the table. 25,000 falls onto grade 4. Okay, that means you have a 25% tax rate. Let me go back to the table. A 25% tax rate and a further deduction of 2,660 RMB, which basically means that your income tax payable is 3,590. So it's not so complicated. And obviously, you have to look at the special deductions that are being offered to individuals, as well as allowances. All right. So a question that I always get is, I have heard that I can also have allowances from the company for reimbursement of transportation, reimbursement of meals, whatever it might be. Now, the rule of thumb with those things is that you shouldn't go overboard with the allowances. There are some foreigners and friends that I know that actually have allowances that account for 50% of their salary package. In my opinion, that's too much. There is no specific guideline, rule of law in regards to how much allowances should be, but it should be a reasonable amount. Like I said, you need to pay taxes in China if you're going to be residing in China. The question is how to best optimize your salary package so that you don't receive any suspicious comments from the tax bureaus. Okay, so you don't want to start off with something, get questions asked from the tax bureau, and then have to change, right? It just gets disappointing, frustrating. It's not fun. So we have to start with a reasonable understanding of what that looks like. Okay, so normally my rule of thumb is that if you're getting a total compensation package, not more than 30 to 35% should be in regards to allowances. Okay, so please do keep that in mind. And also in addition to that, keep in mind that all allowances need to have fapiaos, which are official receipts, attached to them. So if you are negotiating with your landlord that the rent, and your landlord says, oh, you know what, I'm going to give you 5% less of the rental amount as long as I don't have to give you a fapiao. Well, if he doesn't give you a fapiao, then you can't book that into your special deduction. All right. So understand also where and how you can actually negotiate these types of things. Now, are you ready for a salary cut? And this is particularly pertaining to foreigners that are currently in China, and for any foreigners that are looking to be expatriated into the Chinese market. The tax honeymoon for expats will be ending on 31st of December 2020. Will be ending on 31st of December 2021. Starting from 1st of Jan 2022, there will be a major update with 3 major allowances for expatriates. One is housing, one is child education, and the third is language training, which will cease to be individual income tax exempt. Instead, they will be replaced by 6 other deductions, which are unfortunately capped at very low levels. So this will result in a drastic cut to take-home pays. And I have provided 2 examples where I will highlight that to you. At the same time, the individual income tax benefit for annual bonus is also clicking to an end by the end of this year, which means that the calculation will be different starting from 1st of January 2022. Now, the chambers of commerce in Shanghai, Beijing, I believe Guangzhou as well, are all or have already done surveys with their expatriate members about how this new legislation will impact them and how. And so there was one survey going to individuals and there was one survey going to the companies because it's impacting both, okay? Both employees and employers. And the rumor now is that as the foreign governments are getting involved in these discussions, there may be an extension granted by the Chinese tax authorities. We're only in May, so I'm not quite sure how this is going to play out till the end of the year. But whatever the decision is made, employers and employees have to be prepared for what might happen come 1st of January 2022. We all need to be prepared in relation to this. So I've provided here 2 examples, okay? Now, this is making the assumption that the annual salary of the individual is 1 million RMB. So let's just make the example of Mr. Smith. He's been working as a general manager for a Shanghai company. He's there on a 3-year contract. From 2020, 2021, you can see how his salary has been calculated, right? On an annual salary of 1 million, rental has been 240,000. He gets the fapiaos for that. Child education has been 200,000. He's gotten the prop house for that. He's been able to deduct those as special deductions from his annual salary. You look at his IIT cost on an annual basis is 97,000, and his take home at the end of the day is 902,000 for the year. All right. Now, starting from 1st of Jan 2022, what it will look like for this same individual is that he will get an annual salary of 1 million. As there will be no longer any full deductions on rental and child education, those two items will be capped at 18,000 for rental, 24,000 for child education, which means that his income tax owed at the end of the year is 228,000 versus 97,000. He basically has a take-home pay cut of 131,000 RMB for the year, which is about 14.5% cut in terms of take-home, which is tremendous, which is also why a lot of expatriates are freaking out, quite honestly, and saying to themselves, can we afford to remain in China if the company does not amend our package? Okay, so because now you've got to imagine that 771,000, is cutting into child education costs, it's cutting into the rental, all of that type of thing. So we need to be aware of how this will impact people. Okay, so far, this is what I've seen as an outcome. Schools, and I only know this in Shanghai, a number of foreign schools are increasing their subscription or their service fee, their school fee, by 10% in order to be able to cover this income tax deduction from teachers. So it means that you're paying 200,000 for child education. Well, that's now going to go up by 10%. We've noticed that families with larger amounts of children are actually saying we don't want to be in China anymore. It doesn't make sense for us. And others are just evaluating how this will impact them. Example 2 is of a single individual. Okay, so Mary is a sales manager in a Chinese company, has been earning her remuneration mostly from annual performance bonuses. Okay, so she's very upset now that obviously she's going to get a pay cut, but the pay cut is not as large as the previous individual who had tremendous expense special deductions that were available. Okay, why is she getting a pay cut? It's because the annual bonus income tax calculation is going to be different compared to what it is today. Okay, so there are special tax rates for bonuses now that is just going under the general income tax table, like salaries. So there's no difference in regards to that. And for her, although I wouldn't complain about this too much, I would just say I would like to have a higher salary increase to cover the 16,000. Basically, in 2022, she's going to earn about 16,000 RMB less. Okay, that's easier to negotiate than negotiating a whole 131,000 with your company and seeing whether your company is actually going to be providing that. So this is a big issue, and I just wanted to highlight today questions that are being raised by companies to labor law firms, to accounting service providers on how this law is going to impact people, okay? Employers as well as employees. So how should the employers cope with the policy changes, right? Well, first of all, employers need to revisit the employment contracts. They've got to add the proper clauses for this 2021 to 2022 transition, okay? They need to talk to their employees about the take-home pay, how it's going to be adjusted. They need to talk about how much tax costs should be borne by the employer, or should this be borne by the employee, okay? Most of the current employment contracts have not addressed how to deal with the salary cut due to the policy changes, because most employers are just waiting and waiting to see if there's going to be an extension. I would not wait, because at some point, even if there is an extension, this policy is going to come into play. And you need to be prepared for this. And you also need to see whether your employers are prepared. Your employees are prepared for this. So you have to have those discussions. You've got to make those calculations. And you've got to see who is willing to make the adjustment, whether it's going to be a compromise from the employee, a compromise from the employer, or it's going to be a dual compromise from both parties. Does it matter to staff stability? Absolutely. If you are, I mean, let's backtrack a little bit. It really matters to those companies that are reliant on having expatriates based on the ground in China. If you are not reliant on that and you feel that this law is now, or this policy change is now going to be an instigator for you to localize your organization, then maybe that's the push that you need, which means that you're going to localize your operation, and the foreigners are going to go back home. Okay. For many employers, though, there is still this fundamental idea and concept that they need to have a foreigner on the ground to be able to bridge the communication between the subsidiary in China and the head office in the home jurisdiction. So there is still this need and desire of having expatriates on the ground, which just basically means you have to have this open communication with your expatriates and discuss with them how this new policy is going to affect their take-home pay. And again, who's going to take care of them, right? They're in China for you. Who is going to take that responsibility? There's no right or wrong to this question. It's just a matter of, do you have the funds available in your budget to cater for this policy change? All right. And if you don't, then you have to see whether your employee is willing to take that cut. So you do have to have those open discussions. What could be the legal impacts if there are labor disputes due to the policy changes, right? So employers may worry that the affected expatriates may lodge labor arbitration against the company on the ground of insufficient payment of allowance if they're going to be receiving less than what is agreed in their employment contracts. Now, based on the case law system, the labor law system in China, it's commonly accepted that employment arrangements get updated or get amended based on legislation or policy changes, okay? So it's not that the employer is responsible to cover that cost at all, okay? It's just really recommended to have that open dialogue, that open communication with the employees to understand how is this going to impact them, and to give them the option to leave China if they don't accept the changes that that the employer is instigating. Okay, so you need to be aware of that. When should you start preparing for all of this? Well, we are now at the end of May. That means you've got June, July, August, September, October, November, December. You've got 7 months to figure this all out with your expatriates. And obviously, smaller organizations will only have one foreign employee on staff, but some of the larger organizations, you might have 2 to 3, you might even have 10, 20, you might have 50, 60. And you have to go through each expatriate individual to see how their contracts are going to be amended. Some employment contracts require a 6-month notice period. So if you have the intention to localize your organization, then you need to give that termination notice now, okay? Because they've got a termination period that they need to fulfill. And maybe you need to hire somebody to replace them so that there is no, there's a continuous momentum within your organization, okay? This discussion has already garnered quite a high level of negotiation between employers and employees. Again, like I said previously, the employers are not responsible to take over this pay cut. It's not a requirement for them. So it really is a negotiation, or I like to call it a compromise about who is willing to take a little bit of that cut on hand. I don't think it should always be all of the employer. I don't think it should always be all of the employee. But you need to discuss that. Now, in addition to that, once you have a plan in mind on how to make those amendments, the next step after that is doing the amendments in the employment contracts. So don't forget, it's not just a matter of discussion, it's a matter of putting pen to paper and actually putting those amendments on paper, that you have them and that they are filed for Jan 1, 2022. Now, would the individual income tax benefits be renewed beyond 2022? So it was announced that the individual income tax exemption for rent, housing rent, child education, and language training would be gone by the end of 2021. The big question is whether any of the other special deductions or allowances will also be included in that. There's still no information on this. So things like home leave, relocation expense, meals, laundry, taking care of the elderly, the charitable donations, whether this will be impacted at all. So it could continue to be tax-free. As I mentioned earlier, there are also rumors that there's going to be an extension, that this policy will not be implemented as of Jan 1, 2022, but will be extended. So there's still a lot of uncertainty right now, but for sure, you've got to make the calculation of rent, child education, and language training. Now, how serious the tax burden will hike up after 2022? Well, if you make your calculations now, you will probably find that in some instances, you will have a 2% pay cut, especially if there are no special deductions, but it will impact your bonus, or up to 15%, sometimes even up to 30%, depending on how much allowances you are receiving from the company. The higher the allowances, the larger the cut that you're going to receive. So it is important to make that calculation, right? And all we can say is keep fingers crossed that there's going to be this exceptional extension offer. We are not clear as to whether COVID, the repercussions of COVID, the instability that it's organizing, plus don't forget the fact that if you decide to localize and terminate the foreigners' employment contracts, the whole visa issue and getting people out and quarantine is all a little bit of a mess still. So I think the government is waiting until the 1st of October to really analyze what they're going to do in terms of the other special deductions, the other types of allowances, as well as whether there's going to be an extension or not. Now, there are ways of optimizing your salary structure, your salary compensation, okay? And employers have to explore these alternative ways, which is why it's always advisable to get consultants on board who can give you ideas, brainstorm with you on what would be the best methods about this, okay? For those earning the majority of their salaries through bonuses or sales commissions, you might just want to tie that all into a base salary so that you are causing just a small gap in take-home pay, and then maybe giving just a salary increase that the net take-home remains the same. Again, what we want to achieve is an overall tax saving for everybody. So it is a matter of becoming creative and understanding what alternatives exist. Again, this will be very much case-by-case basis because it depends on how your salary is currently structured. Are you getting a salary in China, plus are you getting a salary in another jurisdiction? Do you want to increase that salary in the other jurisdiction and lower the salary in China? There is so much discussion that has to happen really on a case-by-case basis on that. So will the employer be allowed to early terminate the expats if no agreement on the allowance change is reached? And it really depends on the locality. I say this from a legal perspective, but I also just want to say from a human perspective, when you are dealing with expatriates, especially those with children, you need to give advance notice, all right? By law, the rule is you have to provide a 30 days notice period, okay? If no agreement can come into place. But obviously, I make the assumption that you're not going to fire someone in China. You're just going to relocate them to another jurisdiction or send them back to the home jurisdiction to work. In many instances, though, you will have many companies that are operating in China that have foreigners that there's no use for them in the home jurisdiction. There's no use for them in any other subsidiary. So the big question is, if you can't come to an agreement, will you terminate them? That's question number one. Have you looked at your, strategy plan for the future? Are you sure you don't need them on the ground? Are you sure that you don't have capacity in your budget to account for this new policy change? Then it comes to a negotiation, right? Where you might even need to bring in a mediator. Ultimately, what happens if you did decide to go the route of terminating someone, again, in these types of roles, especially with general manager roles and senior management, I would always recommend bringing in a lawyer, a labor lawyer who has the knowledge level and capacity to negotiate with the foreigner, just to protect yourself from an employer perspective. The rule of thumb is you need to provide a 30 days notice period. That's the law by China. Even if your employment contract says that you have a 3 months notice period, the employee can always counter that and say, no, I just want a 30 days notice period. I don't think in today's age, anybody will do that, for the main reason that your visa might not get extended, you might not know where to go, and 30 days is very limited. Okay. Different cities will have different local regulations on that point. So depending on where your company is established, depending on where the employee is based, make sure you, again, get a labor lawyer to know exactly how that will impact you. Yeah, I basically touched on this point already. Again, get a labor lawyer to get professional advice on how these things would pertain to you specifically. Now, one thing that also should be kept in mind, based on the current individual income tax regulations, is the tax resident regulations for foreigners. Okay, this is something that's important because it is getting more and more common that foreigners stay in China for more than just 3, 4, 5, 6, 7 years. And you need to understand then how that is going to impact their salary compensation and how their salary structure is organized. Okay, so with the current law, it says that there are 2 types of individuals when it's pertaining to foreigners. You've got resident individuals who are domiciled and reside in China for more than 183 days in a tax year. Okay, their income can be paid in China, their income can be paid abroad. There will always be a portion of their income that is paid in China, otherwise they wouldn't be able to get their work permits and residence visas. Non-resident individuals are individuals that do not have a domicile in China, and they are in China for less than a total of 183 days in a tax year. What is a tax year? A tax year in China is from January 1st to December 31st. That is the fiscal year, that is the tax year. You have to look at that, the number of days that you are in China based on that time frame. Resident individuals, right? Again, the current tax law is looking at your annual income, and based on your annual income is looking at the tax that is payable. Okay. As I mentioned earlier in today's presentation, the reality of the situation is that on a monthly basis, the withholding agent at the tax bureau is going to withhold the monthly tax amount, which means that you have to still do monthly tax filings, as well as then looking at your annual income and understanding whether you have to do an annual filing. Okay, it's not a necessity always to do an annual filing. To look at the residency rule and understand what is your tax, how to calculate your gross salary in China, you have to understand that the 5-year residency rule no longer exists. It has gone now to a 6-year residency rule. This basically means that if you have been residing in China for 6 straight years, you are now taxed in China on your worldwide income. You can break that 6-year rule with a single departure outside of China, which lasts for more than 30 consecutive days. Once you've finish those 30 consecutive days, the clock to count your tax residency will be reset. This new legislation came out and was implemented 1st of January 2019. That means that for any foreigner that was already residing in China at that point, on 1st of January 2019, their tax residency was reset to 0 for everybody. Okay. One thing to keep in mind is that a foreigner is deemed to have spent a year in China if they have been there for more than 183 days in that tax year. If you have spent less than 24 hours within a single day in China, it's not counted as a day of residency. You have to have spent more than 24 hours. And the number of years of residency, as I said earlier, starts from January 1st and is reset for everybody from January 1st, 2019. The annual income tax declaration. Now, in the past, anybody who was earning an income of more than 10,000 RMB per month, which is an annual income of 120,000 RMB gross salary, had to complete a comprehensive income tax return by March 31st of the following year. The regulation right now is if you have withheld your monthly tax, you have made your calculation at the end of the tax year and you have realized that you have paid too much or too little tax, and it is more than 400 renminbi, this gap. So you've paid your taxes and there's more than 400 renminbi with the outstanding, you have to do an annual income tax filing, which is due between March 1st and 30th of June. Okay, if the gap is less than 400 RMB, there's absolutely no need for you to do the annual individual income tax declaration. Just remember, the withholding is only subjected to your gross salary. There are many foreigners in China that are receiving income in other forms, whether that is in dividends, whether that is in rent because they've purchased a property, whether that is in royalties. You need to be declaring everything by the end of the year. The withholding is just for your base salary, your gross salary that you're getting from the employer, okay? So this is what we are looking at. Ultimately, those expatriates that are getting income through other sources, they would most likely have to file a comprehensive income tax return because the income tax liability would be more than this 400 renminbi gap. The tax authorities are giving stronger anti-tax avoidance powers, okay? And this comes especially when employees have dual contract arrangements, okay? Many expatriates that are in very senior positions will have a contract with their home jurisdiction, with the company in their home jurisdiction, and with their China subsidiary. There will be this employment contract in the home jurisdiction will reflect the work they do for the head office, and they will receive compensation for that. In many instances, the China contract will reflect their responsibilities for the Chinese market and a salary compensation associated with that. The tax authorities are looking at those individuals, and especially if they feel that it's suspicious that their China contract is much less than the standard salary provided to most general managers or senior management staff. So you need to be able to prove how it is working with the dual contract arrangement. Is there an arm's length asset transfer? They're going to look at that. Are you trying to basically evade taxes in China based on your role? So we don't want to get into those types of situations. So this is why, again, I reflect back on what I said earlier. We want to not incur tax evasion. We don't want to avoid paying taxes. We just want to create a solid structure that could be a dual arrangement, but that is logical for the amount of time you spend in China and for the work that you are performing in China against what you have overseas. It is completely understandable that some people will need to earn an income overseas because they have to pay social insurance in their home jurisdiction to make sure they still receive their pension upon retirement, right? So it's a matter of just constructing that it makes sense. And most importantly, not just from a Chinese perspective, but also from the tax authorities in your home jurisdiction. So what do you need to consider from an operational perspective? Okay, so taxpayers must collect all domestic as well as overseas income tax payments related documents. So there has to be paperwork around how you are structuring your salary compensation. Okay, if you are looking to get any deductions, make sure you have the FAPYAOs. If you are negotiating with your landlords not to give you a FAPYAO, but instead to give you a lower rental amount, you can't use that as a deduction. The FAPYAOs have to be all there, or at least the payment receipts have to be all there in order to be able to obtain any type of deductions. As I highlighted in example 1 regarding what's happening in January 1, 2022, housing, rent, and language training are out, but they're not completely out. There are going to be limitations on them, i.e. caps on how much you can actually use as a deduction, which means you will still need to have the FAPYAOs for those items, okay? In addition to that, you must create, revise, and match your own internal processes and systems to make sure that you maintain all your FAPYAOs, that you maintain all of your paperwork. Like I said earlier, there's no point negotiating new salary packages for 2022 and not putting that pen to paper. You got to make sure that everything is tracked, all amendments are tracked, and all the paperwork is following that. So this can either be done by your HR department or it can be done by you. I think the responsibility, quite frankly, falls on both parties. You both need to make sure that all of the paperwork and FAPYAOs are there. That's the end of today's presentation. I hope that gives you insight into the world of personal income tax in China. It's not always so straightforward. If you are looking to get advice or consultancy, here are 8 ways that you can work with Woodburn accountants and advisors, all the way from employment advisory, drafting employment agreements, handbooks, employee company due diligences, incubation services, work permit residence visa applications, which I touched on yesterday, individual income tax calculations, payroll services, and then housing fund and social insurance applications. If you are looking to reach out to me, here are my contact details. I'm going to just let this slide hang for a little bit so that people can read it appropriately. You can also just take a print screen if you want to reach out to me. This is always a bit of a sensitive topic, so I'm happy to have one-to-one discussions as well. If you would just like to brainstorm how to think about 2022 and what that might mean for you and your family residing in China. In terms of questions, so far nothing has popped in. Will, you're the only person that's joined today's presentation. I know a lot of people couldn't join live today, but if you do have any questions, you can type them into the chat box. Or alternatively, hi, Will. Do you have any questions?
Not at this stage, but that's so enlightening. Thank you.
My pleasure.
Yep. Super helpful.
It gives you a bit of a maybe summary of what's happening right now in China in terms of foreigners and foreign compensation packages.
Yeah, I suppose one thing that wasn't addressed there was not sure if you can see me or not, but
yeah, I can.
In situations where tax equalization is in place, I don't know whether that's widely adopted or not, but I presume that the obligations of the employer come 2022 might be different to where there's not.
When you talk about tax equalization, what are you referencing specifically?
So, if an expat in Shanghai or in China, if the employer has agreed with that employee that the tax that would be deducted from their gross salary will be based upon as if they were working in their home country, and then the employer takes on the responsibility to pay the relevant amount. That's right, be it positive or negative, but that's right. Yep. So I presume in that situation,
So I
employer.
don't see that
employee.
often.
Hmm.
I don't see that often because I'm mainly working with companies that might just have only 1 or 2 expats on the ground. And in that situation, they're sort of like, you know what, I've got enough to deal with starting up the business, starting up with XYZ. Look, you've decided to move to China, you've decided on this position, whatever taxes are imposed, and it comes out of your salary.
Got it. Yeah.
How that will then, now the other concept, you can use the term tax equalization, is for 2022. Saying, okay, you know what, you paid 50,000 RMB in taxes for 2020, 2021. Now it's going to go up to 100,000. You cover the 50, I'll cover the other 50.
Yeah.
I see that happening more. Versus, you know, the tax equalization with their home jurisdiction.
Got it.
Yeah. But then again, that's a negotiation. There's no obligation from the employer to do that.
Yep. Understood.
Right? So it will be interesting. I have a lot of, you know, one of the debates going around right now is, why is the Chinese government doing this? Right? Why suddenly are they imposing this new policy? So my first reasoning is the mainland Chinese don't get these deductions, right? So my feeling is they want to have a fair playing field in terms of deductions for everybody. I think also the Chinese government, although they want very high talented, skilled workers in China, they don't need the rest. And I think this is a way for them to push foreign companies to localize their businesses. But again, it's all very debatable, right? In terms of what people's opinions are on this.
That's right. Very good.
All right.
Terrific.
Well, thanks for joining, Will. I appreciate it. For those that are going to be looking at this later on, just so you know, I'm looking tomorrow at social insurance obligations in China. And then on Friday, I'll be looking at recruiting your first employees for your China operation. So if you're looking to join that, please do. You can go to woodburnglobal.com/events to do that registration. Will, thanks for popping on today. At least I wasn't completely alone. For those that are going to be looking at the webinar session later, please do, if you've got any questions, do let me know. Thank you all so much. Take care and have a great afternoon. Bye.